Pancakeswap, one of the most popular decentralized exchanges. From its origins on the BNB chain to its expansion across multiple blockchains, Pancakeswap has built a massive ecosystem around its native token, Cake. We'll explore what Pancakeswap is, how it works, its tokenomics, governance changes, and Cake's long-term potential as a deflationary DeFi token. Cake price prediction for 2025 bull run. Right now, Cake's price is moving sideways around $2.47, which suggests the market is in a period of consolidation, like it's catching its breath after a long decline. The Elliott Wave setup shows that if this base holds, the next major move could push Cake significantly higher, with upside targets in the $7 to $21 range over time. This would represent the next big wave up in the cycle, as the market retraces some of the ground it lost during the previous downturn. However, Elliott Wave also accounts for alternative scenarios. If buyers don't step in with enough momentum, Cake might drop back to retest its lower support levels, the red baseline shown on the chart. Even if that happens, it wouldn't necessarily be bearish in the bigger picture. It could just mean the token is still building a stronger foundation before starting its next large upward cycle. In simple terms, Cake is in a consolidation zone now. If momentum builds, the next leg higher could take it towards $7 to $21. If momentum stalls, it may dip lower first, but that could still set the stage for a larger long-term rally. What is Pancakeswap? Pancakeswap is a decentralized exchange, DEX, built originally on the BNB chain, formerly Binance Smart Chain, and later expanded to other blockchains like Ethereum, Aptos, Base, and Solana. Unlike centralized exchanges like Binance or Coinbase, Pancakeswap doesn't rely on middlemen or order books. Instead, it uses an automated market maker, AMM model, where users trade against liquidity pools of tokens locked by other users. It's basically like a community-run stock exchange for crypto, where the trading fees go back to users providing liquidity rather than to a centralized company. What does Pancakeswap do? Trading, DEX. Swap between thousands of crypto tokens directly, with no KYC or middleman. Liquidity provision, users deposit token pairs, like BNB/Cake, ETH/USDT, to liquidity pools and earn a share of trading fees. Yield farming liquidity providers can stake their LP, liquidity provider, tokens to earn rewards in Cake. Syrup pools, stake Cake to earn more Cake or other project tokens. IFO, initial farm offerings. Launchpad where new projects raise funds by distributing tokens to Cake holders. Perpetuals and derivatives, leverage trading with perpetual contracts, similar to Binance futures. Gamified features, lottery, prediction markets, betting on token price movement, NFT marketplace, and quests that gamify DeFi. Cross-chain expansion, not locked to BNB chain anymore, which makes it more future-proof and reduces dependence on a single ecosystem. Fundamentals of Pancakeswap. Native token, Cake. Used for governance, voting on proposals, staking, yield farming, and participation in IFOs/lotteries. Tokenomics were recently redesigned, Tokenomics 3.0, to cut emissions and introduce deflationary pressure through burns. Revenue model. Pancakeswap makes money via trading fees, IFO participation fees, and gamified services. A portion of these revenues is used to buy back and burn Cake, reducing supply. Token supply. Hard capped at 450 million Cake, reduced from 750 M previously. Daily emissions are being reduced from 29K Cake, 14.5K Cake/day. Regular token burns ensure the token supply shrinks over time, aiming for 4% annual deflation. Benefits of Pancakeswap. Low fees, cheaper trades than Ethereum DEXs like Uniswap, especially on BNB chain. User-friendly, clean interface, mobile-friendly, and gamified DeFi that's easier for beginners. Multi-chain reach, not limited to one ecosystem, gives users more choice. Strong community and brand. Pancakeswap is one of the most recognized DEX brands. Deflationary tokenomics. Reduced emissions and consistent burns could help Cake maintain or increase scarcity. Diverse ecosystem goes beyond just trading, lotteries, NFTs, gaming, IFOs, which creates multiple revenue streams. Governance at Pancakeswap. An important shift in Pancakeswap's Tokenomics 3.0. Under the old model, governance power was tied to VE cake, which required users to lock up cake for set periods of time, similar to the VCRV model on Curve. This structure gave more influence to long-term stackers but also created complexity and left out casual holders who didn't want to lock tokens. With the rollout of Tokenomics 3.0, Pancakeswap has removed VE cake entirely. Now, governance is open to all cake holders, regardless of whether their tokens are staked or locked. This means voting rights are proportionate to the cake balance a wallet holds, rather than being concentrated among VE cake lockers. The change simplifies governance, makes decision-making more inclusive, and aligns Pancakeswap closer to the principle of one token, one vote. At the same time, it removes the incentive for long-term locking, which could reduce committed participation from power users. The goal of this shift is to broaden governance participation, strengthen transparency, and reduce the barriers for the average user to take part in Pancakeswap's future direction. The governance change is positive for Pancakeswap as a platform because it increases inclusivity, participation, and transparency. For cake token holders, it's more mixed. The removal of long-term locking removes a supply sink, but the strong deflationary tokenomics and multi-chain expansion are designed to offset that. If burns remain consistent and adoption grows, cake can still strengthen in the long run, though price stability may be more tied to ecosystem activity than governance structure. Tokenomics. Token emissions in Pancakeswap's context refer to newly minted cake distributed daily as rewards. These emissions are being reduced from around 29,000 cake per day down to 14,500 cake per day in a phased rollout. The cake token now has a total supply hard cap of 450 million, confirmed by a community-approved governance proposal in December 2023. Monthly burn data demonstrates consistent deflation. In January 2025, about 2.1 million cake were burned and 1.0 million minted, resulting in a net burn of approximately 1.08 million cake. By June 2025, over 3.26 million cake were burned versus 652K minted, generating a net burn of roughly 2.61 million cake, equating to a supply reduction of about 0.706% that month. Weekly burn averages during this period hovered around 339K cake, or about 0.12% of total supply, reflecting the protocol's ongoing effectiveness in driving deflation. Under its Tokenomics 3.0 model, Pancakeswap has undertaken a fundamental shift towards sustainability and deflation. The protocol now targets an annual deflation rate of approximately 4%, aimed at reducing the total supply by 20% by 2030. To accomplish this, mechanisms like V-Cake, staking, gauges voting, farm boosting, and revenue sharing, including a 5% fee allocation in V3 pools, have been retired, simplifying governance and redirecting emitted cake toward burn processes. Daily token emissions have already been dramatically reduced from 29,000 cake to 20,000 initially, with a further cut to 14,500 expected in due course, contributing to an annual burn of approximately 5.3 million cake. Notably, a one-time permanent lock of 5.29 million delegated cake from the cake pool was enacted to further reinforce deflationary pressure. Important procedural updates include unlocking all staked cake and VE cake tokens, redeemable on a 1:1 basis until October 23, 2025, and continuation of final epic rewards through May 7, 2025. The combined effect of reduced emissions, enhanced burn mechanisms across key platform features, spot trading, perpetuals, IFOs, lottery/prediction, and simplification of governance reflects a strategic pivot from inflationary incentives towards sustainable value retention. Thesis validation. From a bullish standpoint, Pancakeswap's deflationary transition and streamlined tokenomics bolster long-term value for holders by aligning supply dynamics with revenue-derived burn mechanisms. The expansion across multiple chains enhances accessibility and volume, strengthening network effects. The rich ecosystem, spanning DeFi staples, gamified offerings, and IFOs, provides diversified revenue streams supporting continued token utility and burn rate. Conversely, there are valid concerns. The removal of VE cake and voting locks dismantles alignment incentives for long-term stakeholders, generating dissatisfaction from ecosystem builders, e.g., CakePie DAO. potentially risking trust and commitment. Additionally, emission cuts might disincentivize liquidity provision in the short term, potentially impacting platform liquidity and yield attractiveness. Sector and macro view. Pancakeswap operates in the competitive DEX/DeFi sector alongside Uniswap, SushiSwap, and Radium. Its positioning is strengthened by lower fees and multi-chain reach. Macro-level tailwinds include increasing DEX adoption, demand for low-fee DeFi access, and composability across chains. However, broader crypto sentiment, shaped by regulatory developments, rate policy, and liquidity cycles, remains a key backdrop influencing activity and token demand. Catalyst watch. Short-term catalysts include the finalization of Tokenomics 3.0, emission reductions, and burn execution, unlocking and redemption deadlines in the coming months, and community reaction to governance changes. Long-term catalysts hinge on sustained multi-chain adoption, new feature rollouts, e.g., enhanced NFT and gaming utility, and the performance of burn metrics versus emissions. Pancakeswap's old VE Cake model did drive traction by incentivizing locks, and a modified lockup system could still strengthen Cake. Compared to Uniswap, Pancakeswap is more feature-rich and has stronger direct value accrual for its token. Uniswap, however, wins on liquidity, dominance, and capital efficiency, while Pancakeswap is the more retail-friendly, gamified DeFi hub. Investment summary. Pancakeswap's Tokenomics 3.0 significantly reduces emissions and redirects fees toward burns, targeting 4% annual deflation and 20% supply reduction by 2030. Governance is now simplified. VE Cake and locks removed, with all Cake holders having direct voting rights. The platform remains feature-rich DEX, farming, syrup pools, lotteries, IFOs, NFTs, gaming, supporting diverse utility and burn potential. Emission schedule reduction from 29K, 20K, 14.5K Cake/day, paired with a 5.3 M annual burn underpins deflation. The deflationary shift may enhance long-term token value, but governance restructuring risks stakeholder disillusionment. Concluding all this, as we've seen, Pancakeswap has evolved far beyond a simple DEX. It's now a multi-chain, feature-rich hub with a deflationary token model. The future of Cake depends on how well the platform balances community governance, adoption, and sustained burn mechanisms. Whether you're a DeFi beginner or a seasoned investor, Pancakeswap is a project worth keeping on your radar. If you found this breakdown helpful, don't forget to like, share, and subscribe for more deep dives into crypto projects.